Welcome back, everyone. If you've been thinking about working with us, or if you just want to understand like how the process works on how we go about analyzing client situations from initial call to implementation, this is what this presentation is going to be for you guys today, and how we help our clients make better retirement decisions. Again, my name is Dan Trinati. I am the president and CEO of the Trinati Insurance Agency and 360 Financial Group. If you do want to book a time with us to call, just go to 360financialgroup.com. The link will be out right in the description down here below. Book a time on our calendar, just submit a request, and we'll get right in contact with you. Let's get into it today. So why does the process matter? So especially if you guys are thinking about moving a large portion of your retirement funds into an annuity, we got to make sure that you are making the right decision. And not just about choosing an annuity, but also about choosing the right annuity for your situation, because it's not that easy to undo an annuity decision. And a lot of the times when we find folks come to us, especially on social media, people are just pushing products before they ever actually understand what your problem is and what you're trying to solve. We don't believe in that. So we do the opposite. We want to understand first you, the client, and you need to understand us too, right? It's going to be a two-way street. We got to have trust in you, and you got to have trust in us. Once we finally establish that, then we can build the strategy. But we can't figure out what products and stuff to use until we have the strategy, so then we choose the products. So what do we do here? We have a 5-step process on how we help all of our clients. Very simple. Step number 1, book a meeting. Simple as that. Step number 2, discovery and education. We're going to ask some questions about you, and we're going to get you educated on different options that you have out there and how much you should or shouldn't allocate to an annuity. This is just the initial conversation. Typically takes like 30-ish minutes to run through this. If it is, we're going through more, we go through more. Then step number 3. So after step number 2, there's typically a fork in the road. Does it warrant a third conversation? Do we want to potentially take you on as a client? Could we help you? And do you trust us? If so, we got step number 3. So we do some research and recommendations on our side, and then from there we book a second meeting together. That's when we run the second meeting and go through those. And sometimes step number 3, takes an extra week or 2, just depending on how much research you guys want to do, how many questions you have for us, if you're talking to other folks. Then step number 4 is implementation. Just putting the process in place. Simple as that. We submit the contract, and we'll go through more of that here in a second. Step number 5, ongoing reviews. We want to review the strategy with you guys at least once a year. What's going on in your life, any changes, any updates that we need to make, and boom. That's the roadmap. It's going to be as simple as that. But our goal from day number 1, as soon as you guys book the meeting, is to earn your trust, right? Making sure that you have full faith in what we're doing and what we are recommending. So we're always education first, plan second, products last. In that order. We can't be pitching products if you're not educated, right? You guys got to be educated on how all this stuff works. That is very, very important for us over here at 360. So step number 1, start the conversation. That's it. Book a meeting with us. Boom, done. Step number 2, discovery meeting goals. The goal that we have for all of our clients on the discovery meeting is simple as this, is to get on the same side conceptually. We need to understand the concepts before we can ever start recommending products. And we got to make sure that we can put you in a better financial spot. We do that by educating, right? Build trust, simple as that. And again, if it warrants a second meeting, we have a second meeting from there. This first meeting right here typically takes about like 30-ish minutes to run through all that stuff. On this first meeting, what we are doing before discussing strategy, we need to know how old you are. When do you plan to retire? Are you already retired? Married? Single? What's that going to look like? If we pass away, we got to go through what's called a widow's tax trap, which would have some, potential Roth conversion stuff in there. Family situation, retirement goals. We need your current assets, investments. We need to know all that before we can make a sound recommendation. So we need to also know, what's your current income? What's your future income needs? Factoring in inflation or any big, bills also going to fall off. Is a mortgage going to fall off? What's your retirement spending goals? How much do you guys want in retirement? Right? And sometimes between what we want and what's realistic are also two different things, but we do our best to figure out how close can we get you to that. Are there any income gaps, right? What's your social security going to be? Do you have any pensions? If you're making $5,000 a month, but you need 10 to pay all your bills, where is that extra coming from? Go over some tax situation stuff, RMDs, go through your IRMA. A lot of y'all probably know now, if you're making too much money in retirement through like 401ks, pensions, and even brokerage, that counts against it, your adjusted gross income, your Medicare rates are going to go up. And also also, what are the legacy goals? Do you guys care about leaving behind a nice legacy to a spouse, to the kids? We need to know all that stuff. And again, we educate first. This is very, very big. Before discussing any products, we want you to make sure you understand the concepts that drive good retirement decisions. Going through the rule of 110, how much money should we have in equities versus safe money? We need you guys to be very confident in all of that stuff before going any further. Again, here, rule of 110, how much risk is appropriate inside of our portfolio? Sequence of returns risk. We talk about this pretty much on every single call that we do here. Most people don't consider this. This is where, you have two retirees, and I do this all the time. Retiree A getting 10% and this one getting 8%. You would think this is going to do better. That's not the case in retirement. If the markets are going up, when this person is taking out money at 8% and the markets are going down, even though this person's averaging 10, when they start taking money out, the markets are down, this is going to be detrimental. This person is going to have a very healthy retirement portfolio, but this person over here is not. So that's why we want to allocate some of our stuff to more safe money. Go through some income planning. Where's the retirement coming from? How's it going to be taxed? Go through the different withdrawal strategies together. We need to make sure that you guys are on the same page with all that. Go over bonds, CDs, traditional fixed income, tax planning, again, RMDs, Roth conversions, IRMA, widow's tax wrap, tax diversification. We need to know all that stuff. And then we get into the 4 basic types of fixed indexed annuities. And this is very, very important. If you are going to purchase an annuity, you need to know all this stuff here, the pros, the cons, and everything about the different types of annuities. Top left, you got growth annuity, then bonus annuity, income annuity, and we have a hybrid of growth and income. So your growth annuity is going to be the most common one that people should typically get. I say should because a lot of folks are pitched more income annuities and some other stuff, or bonus annuities, but your growth annuity should be the primary one that you guys are going to look into. It is best for long-term growth. They should not have any annual fees on that. You're going to link it up to indexes like the S&P 500, and this is going to give you the highest long-term growth potential and the best legacy value. Right now, top companies, and this is June 2026, you're typically looking in the ballpark of like 10.5% caps right now. And caps are typically dictated based on the bond market, and bonds are at not an all-time high, but they're doing very well right now on the bonds. There's a good interest earning on bonds, and that's how annuity companies are also tracked. We'll get into more like how to choose the best companies as well. Just because a company shows a very high index right now does not mean that you should do that one. Bonus annuities, right? This is best for immediate asset enhancement or replacing a shitty old annuity. But we typically don't like to use a lot of these bonus annuities unless people just want a lot of security inside of a portfolio. Yes, you're going to get right now, the top one on the market is a 17% no fee bonus. There are bonuses that are higher, like 23%, 25%, but they typically come with a 1% fee over the course of 10 years. So I don't like that because the math doesn't work. But it's great for people, again, just want like an immediate bond style replacement. They're going to get that bonus up front. You still have your, principal protection. There still is growth potential, but you're typically going to have lower long-term growth than pure growth annuities. And let me give you an example. There's one that I'm talking about right here. I'll even use the same company. On the regular growth annuity, right now their cap is at 10.25%. Very strong. If you take the bonus up front, that cap drops to 6.25%. Right? So there's no such thing as free money. And most of y'all are probably getting pitched these bonuses annuities, but just be careful. If your goal is long-term growth, we probably do not want to do a bonus annuity. Income annuity. This is best for maximizing your guaranteed income stream in retirement. And these can be very powerful. These are going to give you the highest guaranteed income. And what's beautiful about the income annuities, there are fees on it, right? So you're pretty much, if you transfer $500K into an income annuity, you're kind of saying goodbye to that $500K because there's going to be fees, there's not going to be much growth, but your income's going to be guaranteed for the rest of your life, also your spouse's life as well if you do what's called a joint income. But from day one, so let's say you're 63 and you're looking into an income annuity, you will know on the contract date that you sign it, from day one, whether it's year 2, year 3, year 4, year 10, when you turn on that income, you know exactly what it's going to be from the very first day. If you're more than 7 years out from retirement, you don't want to use an income annuity. I could not in good faith recommend it. It's really best between like the 0, you're retiring and need to take income now, or a 5-year mark. If you know you have a 5-year window and you just need to replace guaranteed income, you say, hey, you know what, Dan, if I can get an extra $3,000 a month, I'm going to be super happy. All my bills are paid. I don't have to worry ever again. That could be very powerful, but then also you don't have to take any money out of your growth assets. If you like a lot of risk, you can let that stuff sit and ride because your money's coming in every single month on repeat. And there's also a hybrid, growth and income. So it's going to be less growth than a growth annuity, less income than an income annuity. And it's kind of like if a growth annuity and an income annuity had a baby, you're going to land right on a hybrid annuity between those two. There's typically no fees on that, so it'll have better legacy value, still less growth and a little bit less income, but the income still would be guaranteed. And what I like about the hybrid ones is that the income is typically not tied to the performance of the annuity. There's some annuities out there, and you want to be careful of this, where they show you the income based on the performance. Well, if the annuity doesn't perform, the income's not going to do well. With most of them, you still have guaranteed income, and you know what it's going to be based on when you take out the money. So those are the 4 basic types of annuities. So how to find the best annuity, right? There is no best annuity. The right strategy depends entirely on the client's income needs, growth goals, legacy value, risk tolerance, retirement timeline. There is no best annuity. It always depends on your situation. And we'll dive a little bit more into this in step number 3, but there's also software that we use on the back end that literally shows you if you want a growth annuity, boom, here's your options. Here's the best ones that are available right now. Here's the best ratings that all of them have. You know, there could be like a B plus company that has good rates, but they're B plus. If they've been around since 2011, I'm probably not going to choose that annuity. I would not be comfortable with it because they haven't been around that long. Why are you going to trust them for the next 40 years of your life if they've only been around for 15 years? So there's software that helps us do that, and that's what we share on our screen on a Zoom call. We go through all that stuff together so you guys can see. From here, it's simple. Do we have a next meeting, right? Here's the fork in the road. Do our goals align? Are you beginning to trust us? And do we want to take you on as a client? If you believe yes, you're trusting us, and we believe, yeah, we could take you on, we believe we could help you, boom, we schedule a second meeting for like a week, 2 weeks out. So let you guys think about some stuff. We'll send you a nice email. And then guess what? We have step number 3, strategy and research. So we do some more research on our side. You know, based on what your goals are, we're going to do some research and start evaluating a plan for you, start putting together a strategy. So we're going to go through the income needs. We're going to put all this stuff into a spreadsheet. So the spreadsheet will help us kind of figure out what are the assets, what's the future value of the assets, how much income are we going to need. And again, it's going to go over income needs, growth needs, risk tolerance, liquidity needs, legacy objective, and tax considerations. We're going to go through all that stuff. We're going to go through company comparison. And again, here's what I was talking about. We're going to use the software to start comparing insurance companies. It's going to compare all their caps, participation rates. It's going to compare bonuses, historical performance, which is very important, and the financial strength of a company. And this makes it very simple for us. And again, just because one company might have the best rates in one S&P 500 strategy does not mean that we're going to move forward with that company, because there might be other companies that are a little bit further, a little bit behind. Let's say right now there's one company that has like a 60% par rate on the S&P 500, and that's the best, but their other strategies aren't that good, right? So we might not pick that one, and we might go with a company that has a 56% par rate, but they have good caps on other indexes. They have a lot of other good S&P 500s. So we like to make sure that a company's nice and diversified. They don't just have one top index. They have a multitude of top indexes. But boom, that keeps it very simple for us. Why do we use software, right? The client, you guys, doesn't need to trust us. You need to trust the data behind all of it. You need to trust the data, the company, and the agent. And then when we show you why the company we choose is the best for your situation, it makes too much sense. It literally makes it too easy for us to choose the best annuity company. It's very simple. Now we have the meeting, right? So we did all of our research. We put together, a proposal for you. We're going to put together different recommended strategies, potential companies, potential outcomes, and also potential alternative options that we have. And we're going to explain to you why we believe those recommendations are in your best interest. During the meeting, we're going to go through the illustrations and analyses. You're going to see all the stuff on your screen, the software stuff. You're going to see how should the index perform? What is the actual historical data behind these indexes? And then after the meeting, we're going to send a really nice email over to you guys, go through the illustrations, strategy comparisons, carrier information, and that also, just allows you more time for additional research and time to review everything, right? So that's the next meeting that we have. Or not we have another meeting, depends on, what are we thinking here? What are you guys feeling? Does this seem like a good strategy? We believe it does because we recommended it. We wouldn't have had this meeting and put in the work if we don't think that. But obviously, we both need to be on the same page. So then, send you all this stuff. Another week goes by, 2 weeks goes by. Now we have the implementation meeting, right? So we're going to review the final illustrations. We're going to review the final strategy. We're going to answer any remaining questions that you have, and then we confirm the next steps. Boom. Done. Right? Sometimes we need an extra meeting here too. If you guys want us to compare other illustrations or, show you why some company that some other agent recommended, why we probably wouldn't use that company or what might be a little bit better. Or we could say, hey, you know what? That was a good strategy. That is another really good option. flip a coin. You'll be in good hands on both sides of it. So what happens once we actually submit an application? How does this process work? This is very important. Right, so we'll spend about 15 minutes submitting an application. So boom, we submit the application. The carrier, they need about 2 to 3 days to review what's called their suitability to make sure it is a good fit for you. Typically, we know that it would be a good fit, so we know they're not going to decline it, but they still need to do their due diligence on the legal side of things. All right, so the carrier confirms, boom, good to go. They might ask for any additional documentation. Typically, if we are transferring more than 100,000, actually we'll get right into it down here in terms of the transfer process. So boom, all is good. Typically, the custodian of y'all's account, whether it's like Schwab, Fidelity, Vanguard, Empower, they're not going to talk to us, right? They don't want to get rid of their assets, so they're just going to let it sit there like in hiding, right? So you're typically need to call in and kind of, hey, listen, can you please look at this? Is there any other information that we need? And a lot of times those companies, they need us to sign their transfer paperwork as well, but they're not going to tell us that, even though we know that. So you guys got to call in. I'm more than happy to call in with y'all and say, hey, do we need to do anything else? If we can get on top of it real fast, this should be a done deal in about 3 weeks. I've seen less, I've seen more. It just depends on the carriers. How long are they taking? Or not necessarily the carrier, but the custodian, the Fidelities and Schwabs. How long are they taking? Are they giving us any pushback? Is your financial advisor trying to save that? Because obviously they don't want to lose all the assets under management. And typically, this one right here, depending on the size of the transfer, there might be an additional signature verification. Kind of like a notary at a bank, they could ask you to go to the bank to get what's called a medallion signature. Just a fancy, boom, signature that says, yes, this is all legit. I do want to do this. I'm signing off, and you get it notarized and you get a nice fancy stamp on that. And that goes back to your Fidelity or Schwab. Transfer process takes place. Sometimes it could be just ACH. It's very nice. Sometimes they'll send a check in the mail either to you or to the annuity company. After that, the policy issues. Boom, you're good. Funds transfer, we have our onboarding call. You guys get access to your online portal, and that's it. Not it, but that's it for getting started. If you're watching this, you found us on social media, right? But most of our clients actually come through word of mouth because we're very, very big on ongoing relationship with all of our clients. Every single year, at least once a year, twice a year, whatever you guys want. You guys will have my personal cell phone number once y'all are clients. We're always here to help. We want to make sure that we're staying on top of whatever y'all need from a retirement base. So again, the relationship doesn't end after the policies issued. That's when the relationship really starts to begin. So annual reviews, at least once a year, we review goals, income, portfolio allocation, RMD planning, IRMA planning, tax considerations, any life changes. We want to make sure every year we're going through that with y'all. And just always making sure that we're staying on top of everything that we need. And keep in mind, retirement is not one decision. It's a process. Markets change. Tax laws are going to change. Your goals are probably going to change, and life is going to change. So we need to do all that stuff. But our commitment to all of y'all, number one, education. Education first, planning second, products last. We need y'all to be gung-ho and 100% on the first two before we ever start talking about products. Because better decisions come from understanding the strategy, not simply buying a product. The product itself, it's simple. We know how to put y'all with the best companies. That is very simple. We need to get on the same page strategically before we ever get into the products. So if you guys are ready to start, to schedule that step number one, discovery meeting, book the call, take initiative. Just go to 360financialgroup.com, go to our contact page, send us a message. We'll be in contact. But hopefully you guys got something good out of this, and just in terms of how we as professionals go through from step 1 to step 10 or 5. But then how we go through a whole process from, initial conversation to policy submission to ongoing client relationship and management. So anyway, appreciate you guys tuning in. Enjoy the rest of your day, and we'll catch you in the next one.